It's time to get started. Welcome to the November Roundtable live on YouTube. It is
Woohoo!
being broadcast live on our YouTube channel. And for those of you who are watching and would like to subscribe, please do. And all the noise, all the everything in mortgage business, because it's such an exciting world that we live in here every day. Very rarely do we get headlines, and the headlines are the 50-year mortgage.
Oh my
So
gosh.
the administration is considering the 50-year mortgage. So I thought, you know what? Let's take a look at the 50-year mortgage. What does that really mean? And this gives us an opportunity to show you it's something that will probably come out next year. And let me pull this up here, share the screen. Pretty exciting stuff here at Counsel Mortgage. You are looking at the Counsel Mortgage Calculator. How about that? We're going to have a
All
Counsel
right.
Mortgage Calculator to calculate payments. I've been working on this for a little bit. It'll be coming to a app store near you, hopefully soon. So let's take a look at a 50-year fixed mortgage on the new calculator that we have here. So let's enter a loan amount. Let's say $400,000. Let's enter an interest rate. Well, 50-year fixed loans, the rates will probably be higher than 30-year fixed. So let's say
Yeah.
6.875.
So what is that interest rate, John?
Nobody knows yet. Well, because the funny thing is, Mike, as you all know, there's no bonds yet. There's no bonds to sell for a 50-year fixed mortgage. So
So
there's
you
so
figure
much that
the
needs to be done.
yield curve goes flat from 30 years, right?
Yeah, there's so much that needs to be done that this is so, but let's say 6.875 at this point and enter the loan term 50 years. So we calculate the payment on a $400,000 loan, and the payment turns out to be $2368.55 a month. And as you go down further in the Counsel Mortgage Calculator, I know you guys are excited about this, you get to see the amortization schedule.
Nice.
And in the amortization schedule, you'll see in the first payment, $77 is paid towards
Oh my
principal.
goodness.
And the
Crazy.
second payment, third payment, look for the first year. After 12 months, $82 is the most that's paid towards principal. Let's go down the list, as I like to do.
They
Let's
can
go
always
down
make
the
an extra
list and
payment.
see how long it'll take before principal catches up to interest. Anybody want to put some music on the background?
Oh, man.
16 years.
22 years.
Well, 16 years on a 30-year fixed, but how about on a
On
50-year
a
fixed?
50.
It looks like
Add 10.
month 479, right there, 479, month 479.
How
So
many years is that?
479 divided by 12. $39 years.
Oh, God.
40 years in, the principal payment will match the interest payment.
Oh,
And
Mhm.
then, as you can take a look, the total amount of interest is $1,021,152 on a $400,000 loan.
goodness.
Crazy.
That, my friends, is the 50-year fixed mortgage.
Are
Oh,
we
by the way, once I get to a
expecting, Fannie
320
Mae to
balance,
guarantee this?
mortgage insurance would fall off, right? So if I had mortgage insurance, how long before we can get rid of mortgage insurance? Well, the 320 balance would be right around month 340. 340 divided by 12 is 28 years in. You can get rid of mortgage without refinancing. You'd finally have enough. Anyway, so
Now you would get that probably reappraised and try to get your mortgage insurance taken off, right?
yeah. There's lots of things you try to do before then, and
Well,
if you didn't do anything,
Yeah,
anyway.
right.
So that's the
What is-
50-year fix. When I saw this 50-year fix and I heard about the fee, this is stuff because Bill Pulte, who's the head of the FHFA, he's talking about, yeah, we should do a 50-year fixed mortgage, and there's chatter about doing a 50-year fixed mortgage, and
No.
I'm like, well, there are lenders out there that'll do interest only. Why don't you just do a 30-year fixed or a 40-year fixed? Those rates are higher. Like I was checking them today, they're around 7, but it's interest only, meaning that you could pay as much as you want towards principal every month to knock that thing down, and the interest only payment gets lower and lower and lower each month because it's just based an interest only payment based on whatever the outstanding principal is. You're going to pay a heck of a lot less in interest over the life of the loan
Right.
because the interest here is, it's just crazy. But I want to do this. So $1 million of interest. So if it was a 30-year fixed, let's see what that looks like. So a 30-year fix, it's only $545,000 of interest. You match principal and interest payments match in year, let's see here.
17.
Month 240. So 240 divided by 12 is anyone?
20 years.
There you go. Yeah, 20 years. And then it pays off. It's a lot shorter than 40 years. And the total amount of interest is half, 545,000, half of the million or whatever. And that's on a 30-year fixed mortgage.
In your grassroots conversations, John, is there any interest from buyers for these?
Yeah, I've been on some calls with the National Association of Mortgage Brokers, and some of the people back east, they have buyers asking for a 50-year fixed already.
Really?
Now look at what this payment is: 26.27 on a 30-year fixed. On a 50-year fixed,
Sometimes that $300 difference or $400 difference gets the loan done.
23.68. So that was what, a couple $100?
Yeah.
23.68 minus, let's do that again, 30, 26.27, $259. So is that $259 worth it in order
No.
to get into a 50-year fixed mortgage?
Well, if you know that you're only going to live in the house for a couple of years, you're going to sell, you're transitional, you go, I'm here just for a job or something, like sports guys who live here temporarily, might be something beneficial.
Yeah, no, that's a good point. And but look at an adjustable rate mortgage. That could be another thing to look at too. Adjustable rate mortgages are, from what I see, adjustable rate mortgages are not as competitive. There's some places, I've been getting people telling me, oh yeah, an adjustable rate mortgage is something that is very competitive now, and it's something that we should take a look at, and rates are much lower, and you can look at it. I priced it out today. So some wholesale lenders who I usually go to, and their adjustable rate mortgages weren't any better than a 30-year fixed, although the short-term bond is lower than the 10-year bond right now. So I've heard there are lenders offering 5/1 arms and 7/1 arms that are lower. We just have to find them. But anyway, but to your point, Alan, that's exactly what people would do, is they would go to an adjustable rate mortgage, where you could do a 5/1 arm that's amortized over 30 years, and at least more of your payment is going towards principal than towards interest. But like I said, I think the best product, in my opinion, if the rates were better, would be an interest only. Because if you have the option to pay interest only, you can make that minimum interest only payment every month. You meet your mortgage obligation, but then as much principal, you control the amount of principal you want to put in. You can put $5,000 down. You can put $10,000 down. You can and you could pay it down as much as you want, and that payment will continue to get lower because they're only calculating simple interest based on the outstanding balance.
Mm-hmm.
There is a product out there called an all-in-one product. Only one lender that I know offers it, where it's actually a variable rate, and they put the mortgage is like a line of credit, but you get a checking account, and the balance is in your checking account. So every time you get a deposit, it goes off the principal balance in your checking account, and then your payments, you just have the interest payment every year. And that's a very slick product. They don't really have much of it here in the US. I know that they have it overseas. I've heard maybe Australia or something, they see it more often. But that's a very slick product. There's only one lender that I know that offers that product. But and I've had a friend that actually used that product. Those rates are higher, but they pay down their mortgage quicker because they use their checking account as a place where, as soon as a deposit comes in, it goes towards your principal. You still have the checking account there. You can write checks, what have you. It's a pretty slick product. Anyway, but anyway, wanted to talk about the 50-year fixed and mortgage insurance. And this concept of a 50-year fixed, although it's about trying to get more people able to qualify, it's still way down the road because, as I mentioned, they haven't even introduced anything in the mortgage-backed security side yet. They haven't introduced bonds, longer-term bonds enough with a long enough duration in order to satisfy these 50-year fixed mortgages. So this is something that's still kind of down the road. But anyway, it's all the talk right now. Anybody else have anything to say about the 50-year fixed mortgage?
I have a question. Do the interest only, don't they typically have PPPs, like prepayment penalties?
Not on primary residence or second home. That's again,
Okay.
Dodd-Frank made that illegal. But on investor, yeah, they could do that. They could do a
Okay.
prepayment penalty on those. What do you guys think? What do you guys think of the 50-year fixed mortgage? Panel? I feel like I'm on like one of those cable news talk shows. Panel?
I don't like it.
You don't like
It's
it?
gonna go the way of the dodo bird.
So that's coming from the East Coast. How about the West Coast? Hawaii? Anything to say about the 50-year fixed mortgage in Hawaii?
The only thing I can think, John, is that with the cost of housing being so extraordinarily high here, I mean, might make some minor difference. Who knows?
Well, no, that's a good point. So let's take a look on a grander scale. Let's take a look at $1 million mortgage.
Yeah.
Well, I
Just
mean,
for the fun of it.
I could see, John, I can see if the DTI is you're to qualify for somebody. If the DTIs are exactly the same and somebody can qualify with a lower payment for a loan compared to a 30-year, they might be declined on a 30-year because their DTI was too high, but that would be one benefit maybe.
So let's take a look at $1 million.
And John,
Yeah.
if you're going to do anything, don't do $1 million because $1 million's not even a median price for a house right now.
3 million.
What loan amount would you like, Bill?
I don't know, $1.4 million.
Right.
Oh.
This is
It's a
Hawaii, right? This is Hawaii. So the monthly payment on a 30-year fixed mortgage on $1.4 million is $9,197. 9,197. On a 50-year fixed mortgage, this is at 6.875, is $8,289. That's some savings. 8,289. That's $900 in savings. So maybe that's where you're going to see more of it. You may see more of it in the higher,
Luxury.
yeah. Now it wouldn't be Fannie or Freddie and jumbo, right? You'd have to have private investors in order to offer it. But yeah, that may be where you see a little bit more of it. Is you may see more of it, may make more sense. But I don't know that the administration is looking to provide breaks by introducing the 50-year fixed mortgage to that demographic. I think the demographic that they're trying to focus on is those people who can't afford housing. One thing that I noticed that was discussed at the National Association of Mortgage Brokers legislative monthly, we have our monthly Zoom call on the legislative branch, was the term, and you're starting to hear this. You're going to start hearing this from the administration, is affordability. Everybody's going to start talking about affordability. That's what 50-year fixed mortgage goes. That's what that's going to be the new thing that people are going to be talking about is affordability. So you're going to see loan products discussing affordability. That's going to be the new key term that you're going to hear. So, anything else on the 50-year fixed mortgage?
Great option, sounds like.
Could be in the right circumstance. By the way, on that 50-year fixed mortgage, the amount of interest over 50 years on a 1.4 million loan. Anyone want to take a guess? How much interest you're paying?
Almost 4 million.
That's right, 3.5 million in interest.
Oh God.
Yeah, but you spread it out. I mean,
When I first heard it, I said, the banks are going to love this. You know how much money the banks will make on these things? They're going to love this. So anyway, so okay, that's the 50-year fixed mortgage. One question I get quite a bit is why are the mortgage rates not going down when the Fed reduces the Fed funds rate? So every month I write this no interest rates and values update. I think you all get it. I email it to everybody in the company as well as to my database. And I did a little bit of more of a deep dive into what's going on here. As you can see, since the Fed reduced the Fed funds rate on October 29th, mortgage rates really haven't changed much. They're 6.25. It's about still around 6.25. Really haven't done much. And that's because the Fed's actions really alone do not influence mortgage rates. It's economic factors that do, such as inflation and unemployment. The Fed funds rate affects short-term rates, such as the prime rate, savings accounts, home equity lines of credit, credit cards. But, as we know, the 30-year fixed mortgage and mortgage rates tend to follow longer-term debt. And so here's the 10-year bond. And wouldn't you know, since they decreased the Fed funds rate, the 10-year bond's gone up. And so the mortgage, that hasn't really helped mortgage rates at all. So the economic factors that influence mortgage rates are those economic factors that influence major investors in mortgage-backed securities like pension funds and different funds like that. And they make decisions based on economic factors. The Fed funds rate's just one thing. They'll look at inflation, they'll look at unemployment, they'll look at all sorts of other different indices in order to determine, whether they're going to buy or sell. And so given that that's what the economy is based on, and that inflation is inching up, the tariffs are slowly but surely making their way into the economy. Employment's pretty low. And when employment's low, usually that means the economy's got a lot of strength. And when the economy has strength, rates tend to stay higher. We've got two important factors there that are leading to showing that mortgage rates are probably going to stay around this range for a while. I don't see mortgage rates coming down anytime soon. Panel, would you like to discuss? Anybody have anything to contribute on that?
The home prices are gonna keep falling because rates are not getting not helping more buyers
Well, that's a
find
good
accessibility.
point. So if you go further down in that article, because it's a rates and values email,
People keep trying to sell. There's not as many buyers, so they gotta
you'll
keep
see
lowering their price to sell their homes.
in Arizona and California since last year, housing values haven't changed much. But in Hawaii, prices increased about 3.4%. Does that sound about right, Bill?
Yeah, it does to me.
Yeah. And then in Illinois, up about 6.9%. What are you seeing in Indiana, Mike? You see prices going up in Indiana?
for houses, I can't tell you.
Yeah, because you're more commercial.
Commercial real estate is kind of frozen here. A lot of
Literally?
concern. Well, a lot, we still do some manufacturing here in the kind of the old traditional thing. We remember what that's like up around Chicago.
Yeah. Oh, yeah.
We had a lot of mobile home industry, RVs, and associated things. We feed a lot into Detroit, a lot of suppliers to the Detroit market for autos. So, things that affect manufacturing really affect our prices as much as anything else. We're not a big migratory area, except for me. We don't find a lot of people moving here.
Why?
So
I don't understand that.
There's not that transient demand that comes in, stays 3 years, and then goes somewhere else. So it's not the dynamic housing market that you have in California, Arizona, maybe Hawaii. It's more static, I guess. there's more concern here, not so much about interest rates. The concern here is about labor. And I know the headline labor numbers, I just saw 4.3%, I think unemployment was the last metric that came out. But if you drill down into some of the different areas, that unemployment's notably higher and a lot more fragile, I think, going into the winter months. You know, we tend to be seasonal with some of our things here. If you think about RVs, you know, they build and sell seasonally. The big economic contributor here right now is Notre Dame. Yay, go Irish.
Surprised to hear that from a Boilermaker.
Well, I don't know what are you going to talk about for Boilermakers. You know? We're so low on the totem pole, we don't show up.
More basketball you do, that's for sure.
Yeah, I
You're
know.
way up
We're
there in basketball.
supposed to be pretty good coming into our own here. But anyway, price of housing, you know, I don't follow it particularly. But I can tell you that cap rates, if you look at cap rates, perhaps on commercial properties and then segment out retail and office and whatnot, cap rates have actually inched up a little bit. So some of our commercial housing, some of our commercial properties that were doing pretty well, they were at least stable. They're starting to fall off a little bit. And that's, I think, as much a sentiment about optimism for business as anything else. It's going to be interesting here going through the winter and coming out in the spring. Once we get into the election cycle for 26, and it's going to be interesting to see what comes out of Washington, trying to position themselves to get those votes relative to the tariffs and all the things that'll happen here over the next few months. So
that's good. I came across, switching gears a little bit, I came across an article. One thing that we've seen a lot is how builders will offer very low interest rates in order to try to get buyers to use their mortgage company and buy their homes. Well, there's this interesting little Wall Street Journal article that said these cheap mortgages are actually a bad deal for home buyers. What they've noticed is that what the builders do is the reason why they're trying to get the borrowers to go ahead and use their mortgage and use their mortgage company and buy down those rates is they'll still sell the home at whatever the price they're at. Well, this article argues that the prices have been higher and ultimately people are ending up getting underwater in these homes because the mortgages that they're getting, the prices aren't really sustaining. So they'll pay more for a house, but over time, the price was inflated. It isn't what the market's at. The mortgage ends up becoming a little bit higher and they're getting underwater, and they were influenced to get those lower mortgages. Is interesting article. So they're saying that getting those cheap loans with buy downs and rates or whatever may not be beneficial to the buyer. Instead, the buyer should be negotiating price. They should be saying, look, I can go get my mortgage anywhere. Let's negotiate price and come up with something that's closer to where the comps are. As you know, builders, they'll build these little subdivisions and then they'll try to maintain a certain price because they're looking for a price for that whole subdivision. So they're trying to establish a market, but that market may be much higher than what the market is surrounding. So the article says, try to negotiate price as much as you can. Now that point, of course, just depends. If you're in a place where people are where supply of homes is short, you really don't have much negotiating leverage. If you're in a place where their homes are plentiful, you may have a little bit more negotiating leverage, and you may be able to negotiate a price. But they're saying instead of going for the lower rate, try to negotiate with the builders on the price. Any commentary? No commentary. Very nice.
we're coming out of the again, the commercial side of the house.
Mhm.
When I was in the realtor position and negotiating a contract for a price, and the buyers and sellers all get all worked up about the price. And what I would try to tell a buyer is that part of the decision to make that investment should include, if you're going to do the pro formas, that sort of thing, you want to include in there the financing, because sometimes you get what is perceived to be a higher price than street value on a property or in a business with the property, however you look at that. A lot of times you can negotiate the price of money down to where when you pencil it all out, it's an acceptable rate of return. So you pay a little more for the house and you get a little better deal on the financing. But to take those two elements in consideration the same, not just look at one and not deal with the other. And I think that since I'm not the realtor now, I look at that, look at the same thing, but coming from the other side of the desk, talking to people about financing, saying, well, the financing is a little bit high. Why don't we go in here and beat the seller up a little bit on price and work that? And sometimes that it's interesting. It's like nobody's ever thought of that. But it comes with the business card you have in your briefcase, I guess, as to how you look at that.
Definitely, definitely.
But I think the same thing can apply to a house. The only difference is you're working against a household budget as opposed to a business operating income. But I think the same thing could work.
That's good. That's good. Next topic today is deed fraud. Somebody said they wanted us to cover deed fraud. So we are going to discuss deed fraud. Oops, is it there? Yeah. Can everybody see the screen? Let's see here. Everybody see the screen?
Yep.
Okay. Everybody know what deed fraud is or how it works? So here's a slide. This is from the Arizona Department of Real Estate. I am certified to teach for credit hours for real estate agents in the state of Arizona. And I did obtain the deed fraud materials. I was going to do this with another lawyer. We haven't done the class yet. But anyway, this is the materials from the Arizona Department of Real Estate. And so this is how it works. And as you know, deed fraud is when somebody takes your deed and sells your house from underneath you. And then all of a sudden you're like, hey, what happened? So step one, a criminal will locate a property that fits their narrative. Then step two, the criminal will obtain the fraudulent IDs that include the name and information of the rightful owner or victim of the property they intend to steal. Step three, the criminal will contact multiple real estate professionals looking for assistance in listing the property. Step four, once the criminal found a real estate licensee who will list the property, they will forge signatures on listing documents. Step five, the real estate licensee will list the property for sale. Step six, a buyer will make an offer to purchase the property. Step seven, escrow is open. Step eight, closing documents are signed and witnessed by a notary. Step nine, the property closes and the deed is fraudulently conveyed by the new buyer without the original owner ever knowing about it. That's deed fraud. And they say that it's maybe a little bit easier to do deed fraud if there's no mortgage on the property because there's no lien that you have to pay off and there's not another interested party. Although I have heard of instances where deed fraud can occur if there is a lien on the property. So there was actually a case here in Arizona on deed fraud, and I'll find that article for you.
While you're looking for that, Maricopa County offers a service free.
Yep, we're going to get to that. Yes.
Oh,
Yep,
okay.
yep. And I got the link. Yeah, good point,
Okay.
John. Good point. Here it is. So what happened was a realtor helped the Scottsdale police catch deed fraud suspects. The buyer was an investor, real estate investor, and he noticed that there were two women that are identified here in the article allegedly had codes to a lockbox after the locks on the door were changed and were giving potential buyers access to a home they didn't even own. And they said and told the buyer they had a limited window because in the next 48 hours, they were expecting a six-figure check from the buyer. The buyer was approached to buy the home. And when he got to the paperwork, he noticed immediate red flags on the deed. It seemed the whole thing had been filled out by the same person. The sort of key letters in this area script matched the main letters in the notary script, and that should have never been the case. Kind of like what we see in fraudulent emails, right? Where some of the spelling is wrong or whatever, and it's kind of a red flag to not open up that email. For one, this was a $10 transfer on a house in Scottsdale that's worth significantly more. The names didn't match the inherited person. So he asked, how are you related to this person? They avoided it. So he tracked down the real homeowner, and he kept the fraudsters involved. They wanted $400,000 cash within 48 hours. He accepted the offer with the Scottsdale police surrounding the building, and they were arrested. And here are the people who were arrested.
Wow.
So, yeah, it's pretty awful. These title fraud people target homes that are paid off and potentially unoccupied. But then down here in this article, they give you, depending on your county, you can receive alerts, and I've done this too. So in Maricopa County, you click, and I'm sure in Indiana and Hawaii, they probably have places like this too, where you can sign up. Here's the Maricopa County title alert. You enter your email address, your name. So if anything ever happens to your title, you can get an email, text, both, and they'll sign it to you right away. Now, the actual crime may have already taken place, but you'll find out about it instantly, and you may be able to do something about it, as opposed to if you don't find out about the crime until months down the road, because you may not even know. You may not even find out until it's all long gone. They've already conveyed title, and somebody's trying to come with movers to your house saying, hey, you got to get out because I have title, and then you've got a nasty thing. But anyway, that's deed fraud. Apparently, there are some title companies that you can talk to that do have some sort of title insurance that may be able to insure on these types of activities. You can check your local title insurance if you want to look into that. But that's something that's happening. There are companies out there that are kind of like LifeLock. They're going to put a lock on your social security number. They put a lock on the deed. You can pay them a subscription fee. That's a subscription-based basis, based business. But I think, for free, you can sign up with your local county, and anytime you have anything relating to that property, they're going to probably give you a notification. Panel, any comments on deed fraud?
Yeah, I've used that system, John, and I've had a couple notifications saying, but it wasn't because it was because a similar name came up on a deed to a new deed of trust, and it wasn't me. But
Oh,
at least the system is working.
Oh, that's good. That's very interesting. Anybody else have any other stories they'd like to share relating to deed fraud? It's just something to be aware of. I think the best prevention you can do is to sign up with places like that. And that's about it for what you can do for that. Or contact the title company and see what type of policy they can write for you. So, okay, the next part is that I wanted to talk about was, should I get a commercial or residential mortgage? And what I wanted to talk about is differences. Many years ago, I had somebody come to me, and they were buying 5 fourplexes, and they had one contract. They wanted to do one loan over all 5 complexes, and we do it as a commercial loan. I said, sure, we could do that. And for those that are watching the YouTube, on a commercial loan, you're not going to get typically a 30-year fixed mortgage. You're going to get a mortgage that's fixed for 5 years, 10 years if you're lucky, amortized over a 20-year term, maybe 25-year term. Or I said, we could put 30-year fixed mortgages on each one of those fourplexes for you. You're going to have the interest rate locked for the life of the loan. Yeah, the closing cost is times 5, but you're going to have a fixed rate, and it's going to be 30-year fixed, and you can pay it off over time, and that's what he chose to do. So we had the realtor go back and write 5 separate contracts, and we put 5 separate loans on those. But there are instances where you could maybe considering trying to buy something or refinance something, and you could consider either a commercial mortgage or a residential mortgage. It could be for hard money too. So that's just something to consider out there. Now, Mike, for those who are watching, is highly experienced in the commercial real estate and
This
mortgage
means I'm
area.
old, John.
Has done many, many deals. Anyway, anything you'd like to comment on commercial mortgages versus residential mortgages?
Well, they're different. You know, over the years, I talked to a lot of realtors primarily that think they want to transition from residential to commercial real estate. And after some discussion and some years doing it, I concluded that the only thing in common is that they both have dirt. After that, they're different businesses. And I don't do residential mortgages, you know that. So it's hard for me to do. I'm sorry, that's my secretary. So I can't do a real good comparison of residential versus commercial mortgages. They're just different. They both involve money, and they have payments and interest rates and things like that. But even terms and conditions, when you look at them, they're going to read differently. I think one of the big things, and you and I have talked about this, is that you don't have the government restrictions and oversights and these kind of things for commercial that you do with residential.
That's a good point.
You know, it's you're allowed to make all your own mistakes. There's no government backing on those things. So which means you've got more room for error. And so, you know, people that have bought and invested in single family or up to quadruplex, you know, to where it's still residential, you do a bunch of those for 20, 30 years and say, well, gee, now I'm an experienced investor. I'll go out and I'll buy an apartment, or I'll buy a shopping center. It's going to be the same. Well, the real estate isn't the same, and the financing isn't going to be the same. So all that experience you have in residential really doesn't cover you a whole lot when you move into the commercial arena.
Yeah. Well, that's a very good point, because I tend to think, you know, Fannie Mae, Freddie Mac conforming loans, they tend to be like square peg, square hole. I need pay stubs, I need W-2s, I need bank statements, blah, blah, blah. Commercial is different. Commercial is, tell me a story. What is it that you're trying to do? Why is it that you're buying this? What's your experience level in this business? What's your plans? Whatever. My experience is lenders want to know a little bit more about what's going on. Yes, they're going to want your financial statements and your personal financial statement, your tax returns and all that stuff. But they also want to know the story. They want to know what's going on, because these are usually reviewed by credit committees at the banks. And they're going to decide, hey, is this some place where we want to invest our money? Mike, and you want to comment on that?
Well, yeah, I mean, they all have their due diligence list, their checklist. We want these documents, and there's bucket loads of those things. You know, you and I've seen those things come across. But right now, and I think it's probably been this way for a few years, but the biggest item on that checklist that lenders tend to look at today is what they call the strength of the sponsor. That is what about, like you were saying, to your point, what about this guy or gal? You know, what is their experience? You know, how much have you been? And it gets very, very nitty gritty. You know, if you owned a hotel in New York and now you're trying to buy a shopping center in Arizona, there might not be a lot of transference granted you for that hotel experience in New York. The type of property gets very picky. You know, they look through the tenancy. So if you're going to own it, and maybe you're buying something that's already got a tenant, and the tenant's in whatever kind of business they're in, they'll want to know what you know about the business the tenant's in.
How do I turn that off?
in case you lose the tenant. You know,
That's true.
they look for the reliability of the income coming from the tenant to you. And how good are you, the borrower, at assessing the risk of your tenant in that? Because that's the income stream that supposedly pays the mortgage.
Yeah. So the point that I want to make is that, you know, if you can't get a residential loan and you're thinking about doing it for a business, we may want to look at commercial loans or maybe even hard money. Because Alan, you've probably financed. I know you tend to do more investment properties, but there's sometimes businesses associated with those investment properties too, aren't
Yeah,
there?
we get commercial properties every so often. One of the big reasons we get them is the tenant themselves are been there for 10 years. They're running a carpet business, a pest control business, whatever it might be. And then the owner says, "Hey, I'd like, you know, if you want to buy the property from me, here's your chance." And so if they hadn't done a lease option, let's say, but these tenants are realizing, hey, I'd rather buy the property. That way I don't have to move my business. One, that's a cost. And two, they're used to that location's been known by their customers, you know, so they have a motivation for buying that property. So we'll see deals like that come up. And then I also closed. This is just about 4 months ago, 5 months ago. Closed a loan up in Cottonwood on a restaurant, and he was actually buying other rental properties themselves, pulling the cash out for that purpose. And it was a free and clear property. So that, I mean, there's different reasons to do commercial on the hard money side, but we'll do them. Now the LTVs are not as favorable. We might be only at, you know, normally on residential we're doing 70 to 75, maybe on commercial we're doing 65. The biggest issue with commercial is, you know, with residential, you got so many, you know, in a residential area, you got the apples to apples on comps. Commercial, every commercial building's different. You're never going to find an apple to apple. They just don't exist. So how do you figure out what is the true value to determine your LTV is probably the biggest hurdle. And is that LTV good enough for that buyer to buy? You know, they say, well, I only got 20% down. Well, you know, on hard money, you're not going to be able to do a commercial deal with just 20% down. You know, they really need to be bringing in, you know, anywhere from 35 to 40%. And so that's the biggest hurdle is usually LTVs, you know, on commercial deals that I get killed on, where they can't do the deal just because, you know, but again, it's just trying to figure, because we don't do appraisals. You know, the investor himself is looking at that property and determining that and going, all right, well, you know, how many comps are in the neighborhood to support the value? So it's done through a warm and fuzzy feeling.
Yeah, no, that's good. Excellent. Excellent. Any other commentary on commercial versus residential? Okay, we are getting to that time of year where it's time to renew your licenses. So for those of you who have mortgage licenses, it's that time to make sure that you go to NMLS and get it renewed. I just want to remind you of doing that because it usually takes a little bit of time. Best you get it started this month, and then it'll be for sure done by the time December 31st rolls around. And with that, that covers the topics that I had for today's roundtable. Anybody have any other topics they'd like to discuss? I just want to thank everybody for being a part of this. The experience and the knowledge on these roundtables are really good. There's a lot of people here that know a lot, been in the industry and very experienced and can really help folks. We are posting these on YouTube. They are for people to use as a reference down the road. If you haven't, check out our YouTube Counsel Mortgage YouTube page and our channel, and subscribe to it. And you can see the ones we've done earlier too, and just check them out. But over time, I believe that the more and more information that you put out there, it's It's just good stuff. And hopefully people will see it and they'll find us and they'll give us calls. Anyway, with that said, everyone have a great, safe Thanksgiving holiday. Anybody have any fun things planned for Thanksgiving?
Just not cooking.
Not cooking?
Not having to cook.
Not having to cook? That's good.
Family
You know,
togetherness.
John, you know, I call it the ranch, the land I've got over here I'm building on, about 20 acres.
Yep.
And about 3.5, 4 acres of woods. I was up there the other day and went up not real early in the morning, 9:30, 10 o'clock. And I've got about, part of it is about a 15-acre pasture going into the woods. And it was in beans or corn and weeds, and they were all cut and it was kind of low. And walking across there, I've got a pole barn there I keep the equipment in, tractor and toys, whatnot. Coming from the barn over to the woods, there was a turkey, a wild turkey, you know, walking through. And Barb was with me, and I talked to her. He says, "Hey, Barb, look at that! We got a turkey. We've seen them there before, right?" "Oh yeah, look at the turkey." Well, it's kind of curving land out there, and over the horizon, a couple minutes later, another turkey shows up. Hey, golly, there's 2 of them, and then 3 or 4 showed up. I said, "Yeah, we got a herd of turkeys." She says, "No, it's a flock." I said, "Well, we got some." We had, by the time they all kind of meandered over towards the woods, we counted, I think, 10 or 11 of them
Yeah.
out there.
Wow. Wild turkeys in Indiana.
Yeah, so I think this weekend, you know, I'm going to load up the 12 gauge, go out there, hang out at the ranch, see what we can get.
That's good. I thought you were starting on a joke there, Mike, because that was a great run up for a joke too.
There's probably one in there. I'm just not that quick.
All right, guys. Well, everybody have a great, safe Thanksgiving, and we'll see you next month.
Thank you, John.
No, we
Yeah,
won't
take care,
actually,
guys.
right? Hey,
What?
John, no,
See you at
no.
the
Generally, you don't
party.
do a roundtable in December.
I'm thinking I may do a roundtable in December. Yeah.
Oh, you
Just
will?
because
Oh,
we have
okay.
people from other states and what have you. But thank you. Yeah, because we didn't do one last year in December,
Yeah.
but I didn't want to do one in December this year.
Okay. All right. Great.
All right, great. Hey, thanks.